Welcome back, traders and investors. The market is open. We're still unchanged here, 1952 even. Keep an eye, 1954 high from Friday, as well as the high in the overnight session, 53.75. On to talk tech stocks with us is Sean Udall, the tech stock strategist. Sean, how you doing today?
I'm great. How are you guys?
Good. Thanks for coming on. So let's talk tech stocks here. You've had a mighty fine run in many issues here. Coming off kind of the momentum's found some life. Let's start out with Twitter. I mean, that stock has had
Sure.
one heck of a rally here, kind of off that panic low at 29.51. Can the momentum slow, and is this something you might be looking at to short?
No, not as short at all. In fact, the last time I was on the show, we kind of talked about the whole tech wreck, the high beta tech wreck. And I said, well, my single favorite area was basically buying the stocks that everybody threw out. So Twitter, Splunk, Workday, things like that were definitely on my hit list. Now, I think the trick right now with the Twitter, if you were lucky enough and smart enough to buy some Twitter, let's say really anywhere between 30 and 33, is I think not getting too eager on the sell button. But I see Twitter going back to all-time highs. I really don't think that's that big of a call. Absolutely. I love Twitter at the IPO. I nailed the first trade. I actually think Twitter is probably the best big IPO since Google. And I think pretty much everything Facebook has done, Twitter will do and do even better. So I think a lot of people misunderstand the company. They don't need to have near the amount of users that Facebook does. They're a totally different platform, and really what Twitter is going to end up doing is disrupting the whole news aggregation and news distribution business. And they're already doing that to a large degree. So from a trading standpoint, what I basically do is I buy the dips. One of the other things that we talked about, I try to find like maybe a 5-day to a 14-day support level. I like to attack those. But really for Twitter, I think the key right here is about $43. I think if the stock gets through 43, there really isn't a whole lot of resistance. There's a little bit of resistance between 47 and 49, but I really kind of see the next big marker on Twitter being sort of $55 to $59. In fact, the first big drop in Twitter occurred from 67 to 50, and then Twitter made a snapback move to 58.98, and I kind of think that 58.98 is going to serve as an intermediate term magnet.
Wow, it's quite a move. Now, they sure haven't shown much to investors on the earnings front there. You think that maybe we'll turn around at the next quarter?
Well, see, I disagree with that. I mean, the first quarter they came out of the blocks and they had 100% growth. The second quarter they had 119% growth. And I've written a lot of things up in my service, and I've said, the last I heard, my math still says 119% is greater than 20%, or it's greater than 66, or it's greater than 45. And so what I do is I find a report that people love, let's say Palo Alto Networks, where the market bids it up after the quarter, and they had 38, 45% growth. And last I checked, 119% is still a lot more than 48. So I kind of take a little bit of an issue with people. People say that Twitter had bad quarters. Twitter had great quarters. They just didn't have a good reaction to them. I think we're past that big IPO lockup, and I think people are going to be surprised how high Twitter goes. Again, I'm not one. If there's a day and it's at $3, I'm not buying it at the high of the day. But if it has a day where it's down $1.50, $2, or has a 3 or 4 day period where it's down 5 to 10%, I'm probably in there trading the stock. I also do like to sell puts against kind of a wimpy way to be a bull right now is to sell puts.
That's okay.
Yep.
Take in the premium. Okay, let's move on to some
That's
other.
right, brother.
Yeah, let the market do the work for you instead of you doing the work. How about Apple here? Nice bump off. Nice move up going into the split, and come off a little bit here. It's found some support. Now coming back up at the 92.50 level here. Are you one of those perma Apple bulls out there?
No, I'm not a perma Apple bull, but I'm a huge bull right now. So in 2012, this won't take too long. In 2012, I really didn't like Apple, and Google was my largest position. Last year, I flipped that position 180 degrees and went back to Apple being my single largest position and my largest overweight. So I think, again, I think people are actually underestimating upside. So the technical trade in Apple, by the way, is super easy. I mean, 96.69 is the all-time high. So basically, if it gets through that, where's it going to go? Is it 10% higher? Is it 20%? Is it 40%? Probably a little-known stat is when a major market indice breaks to a fresh all-time high, the average return after breaking to a new all-time high is about a 40% move. Now, there's a wide range, but there's a lot of occurrences of this. So Apple sort of sometimes acts like its own asset class. I kind of think it could do that a little bit again. So my longer-term target on Apple between 140 and 150, I think the move to 115 is pretty easy on the name in relatively short order. I think the other thing people miss is that I think there's been a huge reason why Android has grown market share a lot, and it's the screen size in the phone. And I think once Apple has a large screen iPhone, I mean, this is sometimes the obvious thing is the easy thing, but I think once Apple has a large screen iPhone, it's going to take a huge reason to buy Android phones away, other than price. So now that you have a high fours or low mid fives screen size phone for the iPhone, I think people are going to be shocked how much more market share Apple ends up taking back. So I think the easy trade is to break the all-time high, and then it's just a matter, does it move 10, 15, 20, 40%? It's somewhere between 50 and 40 in my view, above the all-time high.
Okay, do you have any tech stocks for us? Apple's had the nice run. Twitter's come up off the low. Do you have anything that you're bottom fishing in?
Yeah, kind of. Imperva is a name I like a lot. Now, this is more of one of my M&A plays. That's IMPV. A little more speculative, but it's in that security space. I'm a huge security supercycle bull. Some of these names have been beaten up pretty good, but Imperva, they have nice technology. They kind of started the whole high beta sell-off, interestingly enough, earlier this year. They were, of all the high beta companies, they were the only one that actually missed the quarter. They pre-announced. And the stock went from, 50 or 52 all the way down to 30, and then it proceeded to go down to 18. It's at 25. It's made a decent recovery off of lows, but it hasn't even gotten back up into the gap.
Nope.
So fundamentally, I like the stock. It's cheap. And then you've got this huge gap between like 32 and $50. And once that stock moves into the gap, again, you've got this huge gap fill potential, and a ton of smart traders are going to be buying it. So basically, I mean, that's a lot of what I like to do, by the way, just to back up. I like to get in things that I know the fundamental story. I like to kind of be a preemptive technical trader. So I like to identify where are the places where the smart early technical traders are going to jump. Well, they're probably going to wait till 28 to 32 to jump on Imperva. Well, in the meantime, I've been buying the stock between 20 and 21. By the time it gets to 30, I've got a hell of a gain. By the time it gets to 50, I've more than doubled my money. Then, if you layer on some calls or whatever option strategies, the return leverage is a lot bit higher. But that's the name. I would be surprised, by the way, if Imperva doesn't get bought probably within the next year. Of all my names where I think it's sort of the most likely company to get taken out, they would be in my top 5 for sure.
Who would take them out?
Microsoft was probably most likely, but you could almost make a list of all the big old security companies are really in trouble because you've got FireEye, you've got Imperva, you've got Palo Alto Networks, and you've got a private company called Palantir Technologies. All the market share is going to all these new companies. The two best companies, in my view, are FireEye and Palantir by a long shot.
Yeah.
So you've got Symantec, you've got Intel with McAfee, you've got Checkpoint Software. These guys basically have to buy growth. If they don't buy growth, they're going to get absolutely demolished. But you can also make a case that Microsoft needs to get bigger into the security space. Oracle's not in that play. IBM and SAP aren't really in the security industry, and they could be in a big way. So I mean, you name it. Whoever really wants to buy them could. And there's a lot of willing bidders with pretty good market caps and lots of stock price currency to buy them now.
Did you participate in the FireEye here? Because that did had the gap down and just kind of the slow roll up. Were you playing the Fire?
Now, which one again?
FireEye, FEYE.
Yeah, in fact, that kind of at the desperate lows. That was like one of my favorite names. Same thing. I liked FireEye at the IPO. I was a call writer and a stock seller when the stock got way overjuiced. In fact, I started trimming that position probably around 75.
Wow.
I think it went all the way up to 95. I mean, put it this way. FireEye had just like Twitter had no business going back to 30, FireEye had no business going under 30. It was just one of these crazy market weird things where who's the last guy willing to hold the shares and not sell? You know what I mean?
Yeah.
And but yeah, that's the name. Like again, that was a little tougher because that's had a bigger move off of lows. This is sort of one I almost have to have a dip to really buy more of. So this is one I'm kind of playing chicken. I'm staying with a position that I've built certainly. Although I'll put it this way, this is one I would not write calls on. There's no way I would write calls on this here because they're potentially an M&A target too. I mean, the funny thing about FireEye is if you were to say, okay, what's the minimum M&A price they could get taken out for? It's probably $55 to $65, which is almost a double from where the stock is here. So again, is how this stock ever got to $25 is just one of those sheer market lunacy things. I mean, it's sort of why did it go to 97 as fast as it did, right? So it's sort of as extreme as it was to the overshoot on the way up. That I would say the downside overshoot was even more extreme on this stock.
Okay. All right. We've had Sean Udall on, the tech stock strategist, giving his very bullish outlook here for a couple stocks, Apple, Twitter, as well as FireEye and IMPV. Sean, thanks for coming on. We appreciate it. We'd like to get you on again soon, in a month or so, and get your update on the market.
You bet. Take care. Everybody watch for a broad market correction, though. After that, I think we have a better outlook. But yeah, I like to buy them ugly right now and hang on to some winners. So then, maybe layer in some put protection on the broad markets like the S&P.
Okay. All right. Thanks, Sean.